Hi, everyone. Welcome to today's 501c Drop with Better Unite. My name is Leya Simmons. I am CEO and co-founder of Better Unite. And I am thrilled today to bring you a friend of mine who I actually met at a nonprofit event now, Kerry, years ago. Kerry Martin, he's here with us from Unitas Brokerage. Hi, Kerry.
Hi, Leah. How are you?
I'm doing well. It's so good to have you.
Thank you for having me.
Of course, I am so excited about this actually. I will say I don't typically get excited talking about insurance. I'm sure you get this a lot, but what I do get really excited about is finding new revenue streams for nonprofit organizations, different ways that you can look at things that you are already doing and turn them into support for the organization. That's exactly what we're talking about here today. We've got turning fixed costs into flexible funding, a new approach to unrestricted revenue. There we go. I've spit it out. All right, Kerry. So I will throw it over to you to take just a moment to introduce yourself. Wait, before you do that, though, let me do a couple of housekeeping announcements. Everybody joining us here today, welcome. Please feel free to say hello in the chat. And anybody watching our recording, which you will all receive over the course of the next week, know that if you have questions now and you're joining us live, you can throw those into the chat, and if we can, we'll work those in. We don't have a ton of time today, and Kerry's got some really cool stuff to talk to us about. But if not, we will make sure to get answers to you. So please throw those in the chat. If you're watching the recording, go ahead and send any questions that you have to support@betterunite.com, and we will make sure that you get an answer. Okay, so diving in now, Kerry, tell our audience, I guess I should say, a little bit about yourself and Unitas Brokerage.
Sure. I'm a career commercial insurance broker. I've worked at a variety of firms, some of the largest in the world, in a variety of different roles. I've been a technician. I've been an office leader. I've been a group leader, pretty much everything in between. I think my first job was just to cut above the mailroom. So I've kind of seen it all from all angles. And along that path, I've worked with clients and industries from all walks of life, including some very large nonprofits in the human service aspect of things. Enjoy that work quite a bit. I've been a consultant. I've gone out on my own. I've started a brokerage, and it's kind of the culmination of all of those experiences has led to Unitas Brokerage and what we're building and how we feel that it can be very beneficial to the nonprofit community.
And that's what brings us here today. You've spent, as you just described, decades literally working in the insurance brokerage business, but also working with nonprofits. So I'm curious, what was like the moment or the pattern that you identified that led you to thinking relative to insurance, relative to nonprofits, this could be done better?
So it's not a moment. It's a accumulation of things where the delivery process for insurance products and services hasn't changed a lot in the last 100 years. And there are some inefficiencies built into it. And they always kind of caught my attention. It culminated several years ago. I was working as a consultant for a large publicly traded company, and we went through an RFP process, request for proposal, which basically is an audition for 4 or 5 brokers to come in, show their wares, say, pick me, pick me, pick me.
Sure.
I'd done that a lot on that side of the table. And I always thought, man, we're the best. Our presentation is the best. How did we get that? How did we not get that? That type of thought process. And now for the first time, I was on the client side. And I was sitting next to the COO and general counsel, and we had the folks come in, and I had written the request for proposal, the questions. I reached out to the group and said, give me your best RFPs. And I put together this thing. I thought I did a pretty nice job at it. I was pretty excited. And then as all these guys came in and spoke, I realized it was just different shades of gray. And I was in the business, and I sat there going, how in the world do you make a decision based on that?
Here?
If 5 folks come in and say the sky is blue, who said it the best? I mean, so it was interesting. So I got to the end of that process, and I turned to the COO and the general counsel, and I said, who do you like? I will make sure whoever you pick does their job. That's how I viewed my role. And they said, well, who do you want to work with? You make the call. And I was like, wow, okay. That was interesting. But what it did, the takeaway was it gave me the perspective of a client of how do you make sense of this? How do you make the right decision? You combine that with a couple elements in the industry where brokers are getting bought and sold a lot. Each time people are making a lot of money. There's a lot of money swashing around the system, and the client, the guy who's creating that money, isn't benefiting from it. So that led to the creation of Unitas, where clients are brought in as equity partners, and they then share in the profits and the distribution, and they effectively can convert a business expense into a new revenue stream out of, effectively thin air,
Yeah.
and that can go to extend their mission and hopefully do good things.
So that takes me right to my next question, which is, I guess just given what you just described, nonprofits are kind of sitting on value that they don't realize is there. What are most of them, or how are most nonprofits thinking about insurance versus how they should be thinking about it?
Well, I think that insurance is an interesting product to buy. It's not going to get you a big audience at a cocktail party, but it is an interesting product to buy. And if you stop and think about it for a second, if I sold you a chair and it was missing a leg, you know right away, right? If I sell you
at that cocktail party, I would.
That's true. And insurance is words. It's a contract, and it's a you're getting access to capital if something bad happens, and something bad doesn't happen very often. So a lot of times you'll get away with, let's say a less than optimal product. You don't even know it until you need it, and then it becomes something. And on top of, if we combine that with my first story about how does different shades of gray, how do you make these decisions? It's completely a subjective exercise. And there are good folks everywhere. Everybody's got a broker. Everybody's out there doing the best they can. And it's really more of an institutional question. And what we've tried to do is institutionally introduce an objective element of how to make this decision, and that is to be a partner and to take the advantage and to reap the advantages of partnership, which includes a revenue stream. And we're the only folks doing that, so we think we've arrived at something that objectively supports the decision to.
That's fascinating. I think that's what you have conceived of is of such value to nonprofits. But I know that, and speaking from my experience during my time with nonprofits, typically insurance is just considered a line item in a budget, and it's one of those line items that, as you said, it's different shades of gray. So I'm just going to minimize the amount of money that I should spend on that. So what shift in thinking needs to occur before we can get to like this really practical change?
I think it's understanding the nuances of the product. And when I said that you don't know you need it till you need it, right. And there is hidden value there in the quality of the contract, and so those mean things. But every broker is going to come in and tell you something similar.
Sure.
I think the mistake, and this is just a general statement, is that, and I'm probably more to your point or your question is, it's not a commodity, and it shouldn't be treated as a commodity. It's not just my browser storage.
Oops. I know we're getting an alert here, everyone, on our thing. But go ahead, Kerry. Keep chatting. We're good.
Okay. I'm not sure what's happening. I apologize for this.
No worries.
It's not a commodity, and it's more than just a line item, and there is good and bad and quality within that purchase. Besides the coverage, what we've introduced is a way to create assets, not just protect assets.
Oh, that's really interesting. That's fascinating. So maybe now, get us into a little bit of this nitty gritty. Like if you've obviously presented this to people in the nonprofit space, and when you're talking to an executive director, what is their first reaction, and what do you, how do you present it so that the kind of skeptical, wait a minute, this was just something I needed to get off my plate and make it as low of a dollar amount as I could, that goes away and they start to realize and recognize the value you're proposing?
Well, to give you a hypothetical, we were talking to I have talked to a nonprofit that's a larger nonprofit, and there are three ways in our model to make money. One is off the insurance of the property casualty program,
Hmm.
the benefits medical insurance program, and we have a partnership with the PEO, so human resources and things like that. Those are three streams. This was a sizable nonprofit that in our model would stand to make 250,000 a year in revenue come back to them as part of that spend.
Wow.
That was their golf outing times two.
Yeah.
I mean, it was meaningful. Now, that was a larger nonprofit, 1,000 employees, $70 million budget, and certainly not everybody's that big. But you can take a slice of that, and regardless of size, that revenue generation coming back is a percentage. So it's commensurate with size, but it's real money. And I had a CFO say to me once that finance, or not that long ago, that finance is a game of inches, and every little dollar helps. And if you think about that, and particularly in the fundraising world, you're developing that revenue and you're not going back to your same donor base. You're not exhausting that. It's found revenue from money you've already spent.
Something that was already going to happen. Okay, so without like completely giving us the entire playbook, can you speak a little bit now to where does that revenue come from for the nonprofit, or how does, um, what does that look like? What pieces, what
Okay.
does that look like?
All
Yeah.
right. So in in our model, because of the way we're built, we eliminate about 50% or 50 cents on the dollar of what our competitors may have to purchase and pay for. Right. So we have bigger margins. Those bigger margins get shared then with the client partners that are actually using our services. The actual delivery, the policy, the program, the carrier, the administration of that, nothing changes.
Okay.
It's all the same. As a broker, we are middlemen. So we have the carriers here, the clients here, and we do a lot of this back and forth.
Uh-huh.
We're not taking risk. We're facilitating is really what it comes down to. And as a facilitator, everything else around us changed. We are providing a service. And the only thing that changes is that broker does change, where whoever you're using today, you now move your program to a broker that you own a piece of. There's no capital investment. Nothing changes effectively other than you have changed that broker. And that does involve making a change, and that's not always easy. And that's why to consider Alpha Pro, it's a business decision as opposed to an administrative decision. So the right folks need to be involved. There are relationships on the other side, and those matter. And probably with vendors that have supported the organization. And it needs to be properly vetted and thought through before making that change. But once you do, it does represent a new revenue stream to the organization.
So, and you just mentioned Alpha Pro. So, can you explain the difference, Unitas Brokerage and Alpha Pro, in that relationship as well?
Oh, I'm sorry. Yes. Unitas is the platform. And so you have Unitas Brokerage up here, and then within that, we can do a variety of different things by industry, by product, and things like that. We're talking about Alpha Pro, or apparently I'm talking about Alpha Pro today, because Alpha Pro is our joint venture brokerage that we do for just nonprofits.
Okay.
We have a Delta Pro for trucking. We have Gamma Pro for small commercial, things
I
like this.
gotcha. Okay.
Alpha Pro is nonprofits, and that's the revenue source that I'm referring to.
Okay.
And I'm sorry, one more thing. What Unitas does is all the insurance expertise, everything else is coming out of the Unitas umbrella and is provided to the various joint ventures. So that gets separated out. The product expertise and the professionals that service that are housed within the joint venture broker. So the folks that are involved in providing the services of Alpha Pro are dedicated solely to the nonprofit community,
That's
solely to
cool.
sharing information, lessons learned, and things like that. When it's all very friendly, we're all on the same side of the table. Working with the carriers, as in a traditional brokerage model, brokers don't necessarily want both sides, carriers and clients, talking to each other because they're a broker. In this model, we're all on the same page. So the client and the carrier, and we're all have a vested interest. There's no prisoner's dilemma in the discussion. And we think that we can deliver a more efficient product in a model like that.
Okay, so is there a particular like size or structure of nonprofit that will benefit more from this kind of product, or is it really whatever size you come in as, where you'll receive something commensurate to that size?
It's commensurate to the size, but if your nonprofit is paying a lot as a percentage of your budget in premium, whether that be for liability insurance, professional liability insurance, um, if you're large from a medical insurance standpoint and things of that
Mhm.
nature, that the impact, the dollar's bigger. If you lay that against budget, it's a percentage, and
Gotcha.
certainly if you're smaller, the smaller the budget, the less the dollar. But again, the game of inches, $5,000 is $5,000, or
Totally.
$500,000 is $500,000. Depending on where you're
And this
coming
was truly just like, there's no differential in price to be a part of this. This was just like money that was already there, money that was going out anyway. You're a very comparably priced product, and now you're getting a return on it.
I would say, and this is oversimplification
Sure.
in a conservative way, but you're going to spend $100 with or without us,
Yeah.
meaning that you don't pay anymore. If Chubb is your insurance company, Chubb is still your insurance company. That doesn't change, and they're the real financial institution that's taking the risk and providing the money. Again, we're just a go-between broker. We're a middleman.
Mhm.
So no, there's no hidden fees or anything like that.
That's incredible. Um, so you're really, and you're describing that it kind of goes across the board. So for anybody that is, hearing this and like I am right now, like, well, why shouldn't everybody do this? What would be a first step to take in considering an option like this?
Yeah, it's a business decision, so it's nothing to be taken quickly or lightly. And it should be thought out. It should be vetted. It should be a topic of discussion for the leadership of the nonprofit. Everybody should
Mhm.
be on board because it's a change. Um, and in a traditional brokerage environment, counts move by what we say broker of record letter, and that's just the letter that says, "Mr. Insurance Company, we are now going to be represented by ABC, and therefore the change." And then that policy, the middleman changes, the policy doesn't change. That's what happens on the brokerage side of things. Um, the, uh, the Before to consider an Alpha Pro or Unitas, um, we want to make sure that we can replicate what you have. So the
Okay.
first step is, let's have a sit down, let's discuss the concept, let's see if you like it. If you do like it, then let's move. The next step would be, let's see your programs, let's understand the money flow, what you're buying. Within that vetting process, we may find something that we can improve on coverage. There may be a better way to do it. So when I say you won't pay any more, realistically,
Yes.
I'm hoping that we do better, but
Wow.
I'll leave it at you won't pay any more at the moment. But the intent here is we're going to really go in and fine tune and hopefully do a better job and pay attention to it. Once we know the numbers and stuff like that, we can sit there and come back to the nonprofit and say, okay, we're ready to go. If you want to, we can replicate this program. Then it becomes a legal issue. This is not just me talking. There are documents behind this that you are an equity holder in Alpha Pro, and you have rights, and that's all spelled out. Everything I will tell you or can tell you is going to be in those documents. But the organization is going to want to run those past his attorney and just say, "Hey, make sure this guy's telling us, what's really in here." And then when those documents are signed, we're in a position to say, "Okay, sign the broker record letter, and now you are an owner of Alpha Pro as well as a client of Alpha Pro." And I would say that process realistically is a 60 to 90-day turn. It can
Okay.
be
That was actually my next
accelerated.
question.
It could be longer. It depends. And then the last element I would say about that is that in this insurance world, anybody who's dealt with this understands this, that you have your expiration dates and your effective dates, and so people don't spend their year wondering about their insurance. They wait for their renewal, and then they deal with it. And so typically it's going to come up maybe 60, 90 days prior to
Okay. So we want to
expiration.
like back that out a little bit from the renewal. Yeah.
Yeah. And, but realistically, this is such a different change that if your expiration was next February, you might want to start talking and thinking about it now, because it's beyond just the insurance. It's a change to the organization that needs to be properly vetted.
Interesting. What would you say are the most common causes for hesitation or pause or maybe even mistakes that nonprofits are making when they do end up talking to you to end up negating their eligibility or something like that for Alpha Pro or Unitas Brokerage?
Well, it's interesting. It's the newness of it, meaning that a lot of people have bought insurance for years, and this is just the
Sure.
way it's done. And I come in and start talking about ownership, and everyone's whoa, 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 whoa.
Yeah,
First of
that's
all,
quite a disruption, isn't it?
yeah, it is disruptive. And so the first, one of the first things that I'm going to hear is, uh, what's the catch?
Yeah, exactly. That was my first thought as well.
Who am I writing the check to? What do you
Sure.
mean it doesn't? I don't have to pay anymore. Like, I don't understand. Um, and there's, well, I'm with a different company, a big company. Why don't they do it? Well,
Fair.
they don't do it. One is because what I'm talking about cannibalizes their revenue. So they're not going to jump. They're not going to come to you and voluntarily say, "Hey, let me show you a way that you can take money out of my pocket and put it in your pocket." From an operational standpoint. You're not going to hear it from somebody else, for one, and it is new. And I draw an analogy. When Amazon started selling books online, 25 years ago, whatever it's been now, and folks are like, well, how's that going to work? That's not going to work. Or when
That's true.
McDonald's came up with fast food
Or
concept.
Netflix, they're gonna mail me a DVD. What?
Yeah, I mean,
Then all of a sudden now you're streaming. What? And I mean, of course, now we know this.
so any innovation is new, and
Sure,
new by definition is going to draw skepticism.
100%.
And I love to tell people we just invented Google, but we're not that smart. I mean, we didn't. The analogy I'll draw is I don't know how folks are. I get kind of amazed when you like a little innovation. For 100 years, a toothbrush was just a straight thing, right? And then somebody said, well, what if we just bent it a little bit? Is it better? And also you're like, wow, toothbrush is this is better. And
Never
you're
thought
like,
about that
huh,
one.
why didn't I think of that? Or why didn't anybody think of that? What took so long? That type of thing. So I would throw this innovation into that toothbrush category as opposed to Jeff Bezos or Google or
Google, yeah,
Netflix or anything like
I
that.
got you.
So anyway, it's getting folks used to a concept that they just haven't seen, and it's getting them to focus a little bit. Listen, you guys got businesses to run. You're in nonprofits to run. You got a mission to chase, and
Yeah,
this is a ancillary supportive purchase that you hope you don't know anything about it, because that means you don't have any claim issues and things like that, right? So it's getting people to focus and just accept the fact and take an honest look and have a entrepreneurial bent that maybe there is a better way to do this. And here,
yeah.
here's well, go ahead with your next question, Leah.
Yeah, oh, well, I was actually just going to comment on what you said. It's interesting because it's like I can on one hand make the argument that nonprofits can be a little bit slow to adopt change. And at the same time, personally, Leah, me, having worked in the nonprofit in and for and with nonprofits my entire adult life, I see them as decently entrepreneurial, the people that make them up a lot of the time. I mean, we're talking about board members or captains of industry, they're a lot of the time entrepreneurs in their own right. And then, executive directors or founders of nonprofits have gone out on a limb and tried a new thing. So, I can see that, you would encounter both, frankly.
Yeah, and one of my most early in my career, a nonprofit story that I really got a kick out of. It was I was working. I had a client. We were on the golf course with two of the leading guys, and we were all about the same age, so we were pretty young at the time. And it's a great organization. They've grown since, and they do tremendous work. And within the city of Chicago, they were putting in a group home in a ward, and not surprisingly, the neighborhood is all up in arms, and the councilman was involved, and all
Oh
this sort
gosh.
of stuff. And the gentleman I was talking to was telling the story about how they were getting it done, basically, getting it through the political obstacle course to make it happen.
Yeah.
And I was just fascinated by it. And I complimented him and made a comment or something. He said to me, he goes, look, just because we're nonprofits, we're not just a bunch of tree huggers. We get stuff done. I mean,
Yeah.
this is my world, fighting with city councilmen and neighbors and all kinds of stuff on a daily basis. So um, there is that element, and for the folks that I've been around in the nonprofit space that have been really successful in growing their mission are most certainly entrepreneurial and are looking for new ways to help them push that ball further down the road. And that's when that happens. That's exciting when you feel like you can be a part of it and that you played something of a role to help bring some good to the world. That's rewarding.
I'm so, like I said, I love this kind of thought where it's basically something out of something that's already occurring. So what in your career, in your past, really turned you toward nonprofit? So Kerry and I met at a national CASA conference, and I was representing Better Unite. He was at the time working with a different insurance company. And so I know that you've been working around nonprofits for quite a while. What led you to that? Was there something in your background or some experience that took you there?
You know, that's a great question. I think it's
It's not
personal.
on our script either. I'm sorry, I'm throwing you a curveball here.
It's, okay. Leah, you're supposed to stick to the
I
script.
know, I'm so sorry.
The it's it's personal. I think it's I mean the way I guess this sounds really like I'm on a Dr. Phil show now, but I mean
Go
it's like
for it.
I'm on the it's the way I was raised. It's feeling good. It's like just doing something. I
Yeah.
remember in this instance, I've done things where what I like to do when I'm handling an account is I like to go to the operations. If it's a manufacturing plant or if it's whatever, I walked in when I walked into a high school in a very rough part of Chicago, and there was the nonprofit was holding a group session with teenage girls, and these were high school age, and they some had already had children, some had terrible home lives, and what really hit me is that the therapist leader of the discussion was talking, and she was telling these young girls that it's not okay that he hit you. It's their understanding of normal was not right, was not
Right.
acceptable. And as I left on this very good, I mean beautiful spring day in Chicago, one of the folks at the high school administrator said, "Where'd you park?" I said, "Well, I parked right over there." And they said, "Oh, you're okay then." And I was confused. I said, "What?" She said, "Well, that they whoever they is, they know you're with the school, and you're with the, so your car's all right." And so when you see that, or as I visited a group home of teenage kids that have just been through hell,
Hmm.
um, you just have an appreciation for what really can happen in the world, and that stuff impacted me. So as I went through my career and I saw these inefficiencies in the system, and I kind of thought, man, I could turn this around and generate something. I mean, from the nonprofit standpoint, if we, to grow this business, I would like to be able to say in, relatively short order that we created a couple of $1 million that funneled back to the nonprofit community out of a business expense.
Yeah.
Then I'll feel good about myself. I mean, that's really where it comes down to.
It's such an incredible mission. It really, like I said, these innovative ways, especially in today's environment, Carrie, where there's been so many cuts and so much bad news for nonprofit organizations, frankly, over the past couple of years. While we see donations broadly increasing, like we have fewer and fewer people donating, we have an erosion of trust, we have all of these things, all of these headwinds really at nonprofits. It's so refreshing to hear of a completely novel idea, taking something that's just already there, already a budget line, and hopefully maybe converting it into something that can move the needle in some way. I just completely applaud this effort. And By the way, oversharing is my superpower. So there's none of that here that's even possible to do because, that's just, everybody loves a good origin story too. Isn't that true?
Yeah, no, absolutely. Absolutely. Absolutely.
Okay, we'll see. So how does Oh, this is a good question. How would, in your estimation, does having access to something like this, which, by the way, would be unrestricted funds for an organization, for a nonprofit to utilize? Obviously, this you're talking about these kind of potentially incremental, maybe more than that, moving of the needle, of a financial needle. But what could it do for the nonprofit, in your estimation, culturally?
Um, you know, it, the I think there's to me the analogy that I'll draw is owning something means something,
Yeah.
right? So I mean, it's like renting an apartment versus owning a house.
Hmm.
So I think the whole mindset changes when you realize that broker is mine, is partly mine. So that I think changes internally. I it just changes the view, I think. And then the practical advantages of it are this. Um, I will sit down with somebody, and in fact, just today I was talking to somebody, and they said, my broker does a good job for me. And I said, fantastic, that's great. We fully would expect to do the exact same thing, if not better. Give me a chance, that type of thing. But the now it's like that they work for you literally. I mean, literally. So if
Very
there's a
directly.
problem, if there's a problem, you know, we'll fix it. I mean, if there's insurance companies price products like this. This is the dynamic. Insurance companies want the client to pay as much as they're willing to pay, but still keep them as a client. The client wants to pay as little as I can get for insurance, and under the most attractive means type thing. And in the middle is the broker doing a little bit of talking a little bit here, talking a little bit there, that type of thing. Well, in this model, we're on the same page, and where that dynamic I think gets highlighted. For example, um, in a business sense, you don't necessarily fire your bank over a nickel. You just
Right.
don't, right? I mean, that's a financial partner. I think it's a mistake to not, and this maybe circles back to one of your earlier questions. An insurance company is a financial partner. If you have a problem, they're going to write you a check for $1 million or $2 million or something to
That's
that
interesting.
effect.
I don't ever think of an insurance company as a financial partner, but that's a great reframe.
It is, and it doesn't happen every year, obviously, or they never make money on their $20,000 of premium, writing $1 million checks every day. There's a reason, it is what it is. But that's a financial partner, and there are going to be times when you have a claim in a gray area that it's words. At the end of the day, it's words, and and relationships will certainly matter in those instances. So even throughout my career, from a client perspective, I would never counsel somebody to switch insurance companies for 3% or something like that. I'd rather have a conversation and let's talk about that 3% and let's see if we can get something else for it or whatever it might be, or maybe there's a good reason for the 3%. The point is, you don't necessarily switch a financial partner easily unless there's good reason, and there will be good reasons. It happens. I'm not suggesting you never make a change, but for the buyer that goes out and shops it every year and they think that's good due diligence, it's not.
Really
It's not,
interesting.
because that underwriter at the insurance company sees the same application every year and never gets the business, and they've
Mm,
got resources that they are to put to work, and they're going to direct those resources, that capital, toward people that he thinks he can write an account. That's how he or she gets paid. That's what they're
sure.
there to do. So for the broker who says, I went to 25 insurance companies every year, that's not an effective way to do it. That you're actually hurting your client in doing it that way. And what I've always said is, like, look, let's do this every 3 years. Let's make a point. So when we go to the market, we hit those underwriting companies, we say the account is in play. Give me your best number. Stop messing around.
Hmm.
If you go back to my earlier comment a second ago about, I want you to pay as much as you're willing to pay. I want to, that whole dynamic. If you're that underwriter and you've seen this submission every year for 5 years and you're never close, you're just getting exercised. So
Yeah.
you don't sharpen your pencil. You go, okay, all right, Bill, it's $100,000. Oh, I'm not going to get
There you
it.
go.
Surprise, surprise.
Right. Right.
Um,
Not
but
worth
I'm
my
not
time.
going to I'm not going to cut it back,
Right. That's interesting. So there's that 3-year timeline too. That's an important thing to note as well.
Two or 3 years, whatever it is, but you're intentional in the way you do it, and you'll get the best result from the underwriting community as far as pricing the product.
Interesting. Okay. Well, so say then there's a nonprofit that has just, you know, switched insurance this past year, but is very interested in Alpha Pro and this prospect because this is such a new idea. Would you say there's a caveat here, or would you still give the guidance of no, pump the brakes, wait for one more year before you consider a switch?
Yeah, the whole premise of Alpha Pro is that whoever your carrier is, that you keep that carrier.
I see.
And
That's
so
right.
we come in that we don't mandate any kind of change, but when we come in, we may come up with a better way to do it, but we have to, convince the client of that. And the client could say, yeah, I disagree. We're happy where we are. Okay. We work for you. We'll exercise it. I mean, we'll do what you'd like us to do.
Okay. Interesting. All right. Well, so what I mean, you've really gone through and described a lot of this. Is there anything we've missed covering relative to both Alpha Pro and Unitas Brokerage?
Yeah, I would say um, I, I would say that within the context of your insurance, in really the broader term, your risk management program, there are a variety of
Sure.
things you can do in the quote. Insurance is one way to deal with risk, and there's other ways. There's absorbing it. There's other transfer mechanisms and things like that. And risk management may involve contract review and things. So it's a broader element there. A lot of what Alpha Pro does, the approach that we will take is it's an a la carte approach, meaning every client's different with different needs, and there are a variety of service providers out there that are specialists. Um, a lot of our larger competitors are great companies, and they'll try to incorporate every service manageable into their portfolio, and a lot of that is not needed for a particular instance, and it's all built into their infrastructure and their cost and things like that. It's basically turnkey versus a la carte. So
Mm.
what I would always try to say and get across is that, look, you don't give up anything from that big guy to coming here to a smaller broker, because if there's a need, you know the technical service providers and the intellectual capital that we possess is the same as what's over here. It's just in this much smaller pond or body of water, let's say. um, Anything that's needed, we can custom diagnose and then go out and procure that service that's needed on our dime, without having to fund for all this stuff that most people are never going to use. So
Huh.
to sum that up, but what I'm trying to say, if as a point of emphasis, is that we're consultants, and we're going to come in there and we're going to identify what's needed and then get you what you need. We're not going to pay for it all up front and then try to pass that cost through. We're going to do it efficiently, and then we will still make sure that the appropriate resources are brought to the table. We don't nothing is given up in going our custom route versus a turnkey route.
So it's like bespoke, or that custom route. That's a great way to put it. All right. Well, so then what if, you had a wish that everybody here today on this webinar and everybody watching later takes one thing away, aside from reach out to Kerry and become a client of United Brokerage. But if they take one thing away, what would you say that is?
I would say realize there's different ways to do things.
That's a great one.
Realize that big brands or other brands and stuff aren't necessarily the best by definition. Look at the quality of the professional, and and be open to the fact that just because something hasn't changed in 100 years, that doesn't mean it can't be done better.
If
That's
anything,
all I
maybe
can
it's
ask
right
for.
for it.
Yeah, I mean, that's all I can ask is an open mind, and take a look.
I love that. I think it's such a beautiful way to end this, actually, as well, Kerry. Thank you so much for shedding light on something that, frankly, I have really never, I mean, since my days as an executive director, thought about nonprofit insurance, and I absolutely never thought of it as a revenue stream or a potential revenue stream. When you called me about this, I was just thrilled. I thought I think this is brilliant, and I'm very excited that we have the opportunity to bring what you're offering to our audience. So, everybody that is listening, Kerry, thank you first of all for joining me and sharing this, and for doing what you're doing. Thank you, thank you, thank you.
Thank you for the opportunity, Leah. It was great seeing you again, and thank you for everybody who took a listen.
Oh, my pleasure. Absolutely. And I think I'm showing you the wrong thing. So I was trying to share a slide that is going to talk about what we are going to talk about. Let's see if I can get this to advance. Now I'm having the technical difficulties here, Kerry. Okay, there you are. That was what we did and talked about today. Here is Kerry's information. This is what I was trying to get us to. So if you have questions for Kerry, if you're interested in Alpha Pro and Unitas Brokerage and what they're doing for our nonprofit industry, please email Kerry here. And Kerry, is there any other way that you'd like people to connect with you that you'd like to say out loud or drop in our chat?
No, I mean, the email is fine. K Martin at Unitas Brokerage. Can I give my cell phone? Is that?
Go ahead, drop it into the chat and feel free.
My phone number is 847-800-7082. Kerry Martin. Love to talk to anybody who's interested. And I look forward to meeting folks.
That's amazing. And then let me also say, next week on our next 501c drop, we will be, you'll be joined by just me, and I'm going to be talking about our friends at Fundraise Up and Stripe. We work with both Better Unite here. We work with both of those organizations, both of those companies, and they came together and created a report called The Pulse of the Donor. And isn't that what it's called? Yes. I don't exactly. Yeah. Pulse of the Donor. That's the report. And it's the 2025 Pulse of the Donor. It's been out for about a month now, I want to say, and it had some really fascinating insights into what fundraising looked like, how it was best accomplished, all of this in 2025. They're always one of the Fundraise Up and Stripe, this Pulse of the Donor report. It's always kind of one of the first on the scene, reporting on last year's information and data. And so I will be reviewing the findings in that next week, April 14th at 1:30 p.m. Central. So if you're interested in joining me and learning more about that report, obviously you'll be able to access the report as well. Scan there and join me then. We'll also send out some information about that as well. And if you have questions about Better Unite, which Kerry is just a wonderful partner of Better Unite's, if you've got a question about Better Unite and our software as well, please scan that QR code or email support@betterunite.com, and we would be very happy to show you around. Kerry, again, thank you so much. And I just can't say enough. I obviously, as an entrepreneur myself and working in the tech world, I'm a big fan of things that disrupt and things that can bring something new to the table. But it's really my passion and love for nonprofits that has me so excited about what you're doing. So just all I can say is thank you. And I hope this is an incredible success.
Appreciate it, Leah. Thank you so much. And thank you for the time.
Of course. Absolutely. All right, everybody. Thank you so much for joining us. Thanks for spending a little time. Come back, join me again. Let's go do some good. Have a great day.